JJ the CPA here. Hope you're doing well. So, this payroll tax deferral, not cut, otherwise known as the payroll tax holiday. I've seen a few of your questions have been great comments, so I've got some responses to go over to make sure that we are getting good information out for you to make a great decision. Let's go. American CPA. All right, so here working late, throwing one together. Did you like my little thumbnail? I noticed, and kudos to the other guy on YouTube, he always just holds up a thing and gets a ton of views. I thought, well, maybe I'll try it. So on this payroll tax deferral that I've been talking about, and I'll put a link to the other 3 videos that I've done on this, but you can opt out of it because you have to actually opt into it. Now, what does that mean? What I'm saying is, as I'm understanding it, now it doesn't mean that your employer is going to understand it this way, is that you don't have to do this, as in you would need to tell your employer that you want to do it. So what does that mean? Well, it doesn't matter what JJ the CPA says. What it means is let your employer know what it is that you want to do. Do you want to do it or not? So don't leave it up to chance. Don't wait till you get your first pay stub and then you're like, what? You ever seen that episode of Friends? And I think it's Rachel gets her first paycheck and she's like, who's FICA and why are they getting all my money? It is a 0% loan. I have noticed there are a few people are like, well, hey, why not do it? 0% loan. You're getting more money in your check for the last 4 months. Yes, you're going to have to pay it back in the first 4, 0% loan. So no harm if you do it, just not a overall tax benefit. Number of individuals have wondered if they should go ahead and participate because Trump had indicated that if he wins the election, that he'll, forgive payroll taxes or do away with payroll taxes. So without getting political or not, regardless of who the president is, for the president to be able to affect taxes in that way, as in Social Security, Medicare, income taxes, they have to have Congress approval, which just means that it has to be provided to them in a bill that's been passed by the House and the Senate. Then the president can decide. So yes, the president could, with a new House, new Senate, convince them that we should get rid of payroll taxes and or whatever payroll taxes were deferred should be forgiven. Anything's possible. However, both the Republicans and the Democrats, both the House and the Senate, are not for this at all. Trump has been talking about a payroll tax cut, a payroll tax, abolishment to some extent. Really, ever since he came into office, it was a hot and heavy issue of his in 2019. So I do a monthly tax seminar for Surgent, a wonderful tax continuing professional education group that's nationwide. The best there is, surgent.com, if you need any tax continuing professional education. But anyways, I write a show. Amanda helps me write it. She might write more than me now of it. But anyways, it was something that we talked about all last year. Every single month in this tax update that I wrote and delivered to CPAs across the nation, which is just to mean that CPAs were being delivered this information. It was something that wasn't being challenged by the CPA industry, but what was being challenged was the Congress saying, well, sorry, Trump, you're not going to be able to do that. Trump even investigated a way for the Treasury, the budget and budget office. I don't know. It is late. Let me tell you that right now. The FBO. Anyways, there's a division in the government that takes into account what is in the budget, how things are allocated, and then works in conjunction with Treasury, the IRS, et cetera, et cetera, et cetera, et cetera. And what I'm telling you is that Trump, I'm not saying it's a bad thing, but Trump took a real run at this very issue, as well as a couple others, to look at even beyond an executive order and was not successful in doing it. I don't know that he actually took action to do it, but I know for a fact he was taking action to see if he could do it, and he wasn't able to do it. So all I'm trying to say is that the president alone is not going to be able to find a way to forgive these taxes. It's going to require Congress to be involved with it. Wages, if they're over $2,000, then up to $2,000, because that's per week, you would be able to take this benefit on. There was a question of the wages were above the threshold, so could they still participate? And the answer is yes. So if you're, I wrote this up. Just some notes here. Okay. So what I wrote up here is that wages up to $2,000 a week. If the wages were $2,500, for the week, then 500 wouldn't be eligible, and then 2,000 would be eligible. So it doesn't have to be that you make less than that to be eligible for it. On the self-employed, unfortunately, you're not included. Just not. It's on wages only. So the Social Security portion of your self-employment taxes is not taken into account related to this. There might have been some thinking or maybe an opportunity, but when you go back and you look at what the IRS put out in their clarification, it is only for wages. So no interpretation now that it would be helpful to the self-employed, because we're talking about the deferral of payroll taxes on the Social Security, not to be confused with the other tax credits that self-employed get to take advantage of related to the sick leave and the Expanded Family Medical Leave Act. So a lot of stuff going on this year related to Social Security taxes on the self-employed and the employees. Just know this, that for this deferral out of the presidential memorandum, it doesn't apply to the self-employed. So if you've come across something and you think that it applies to the self-employed, it very well may, but not on this one. And then DD, the CPA, Daryl, hope you're doing well. Thanks for tuning in. Had a great question and was reading it, and just from one CPA to another was reading it. It's like, hey, is this actually saying in the IRS guidelines that the employer would be on the hook? So here's the, especially if the employee left. So here's the deal on that one. If you read through the memorandum that the IRS put together, you have to remember, I'm a practicing CPA too. So I'm working my tail off getting some taxes done for September 15th. And so I'm sorry I don't have graphics up, but I think that's why everybody likes this channel, because it's not necessarily as polished as maybe like CNN or something. But in this this notice that came out, I guess I could just turn my camera. In this notice that came out at the bottom of page 1, it indicates, I was looking for my readers, in the little fine print, it says a deposit obligation for employee Social Security tax does not arise until the tax is withheld. So if that employee is gone, then that employee doesn't have wages, of course, with that employer anymore. Therefore, they can't be withheld. Therefore, there's no depository obligation because the employer doesn't remit it to the IRS until they withhold it. So if they've never withheld it, then they don't have the obligation to pay it to the IRS later if the employee is gone. It further says, accordingly, by postponing the time for withholding the employee Social Security tax, the deposit obligation is delayed by operation of the regulations. And then further, my good friend DD, the CPA, said here, it's the bottom of page 2 into page 3. I'll have a link to this memorandum or IRS notice that we're looking at here. But it says, that if necessary, the affected taxpayer may make arrangements to otherwise collect the total applicable taxes from the employee. So the way I interpret that, Daryl, is that you have an employer that has an employee that it's going to be detrimental to them if they withhold those taxes now in 2021, meaning that employee is going to have less pay. I mean, obviously. So the employer could say, you know what, I'll go ahead, I'll cover that tax for you. And I will make arrangements with you to get that from you later, but I'll go ahead and pay that for you. And then you'll pay it back to me as the employer. So when I'm reading and it says, if necessary, the affected taxpayer may make arrangements to otherwise collect the total applicable taxes from the employee. That's kind of how I'm interpreting that. You know, a lot of small businesses, it's like, okay, hey, it's time to pay it back. We're going to go ahead and withhold it. The employee is, you know, not in a good situation, and therefore they're going to, you know, I'm tired. The employee can weigh on an employer's emotions. Let me just put it that way. I'm trying to say that properly. So the employer may say, hey, well, I'll tell you what, I'll help you out. We still have to get these taxes paid in. Otherwise, you're going to have the penalties. So we'll go ahead and withhold them. I will collect this from you over a longer period of time. So that's how I'm reading that. So I'm not reading it as though the employer is on the hook. Because if the employee leaves, they're not there then to have it withheld. And then if the employee can't come up with the money, I'm interpreting it that the employer can, in essence, front it. And, you know, when you read further that if it's not paid, then the employee, you know, has to make arrangements with the IRS to pay it. So I do feel like it's really on the employee's head on this one. And then someone had asked, does this apply to any of the other taxes? And it's no, it only applies to the Social Security taxes, the 6.2%. So, you know, I think I provided in another example, but if your wages are $1,000, they don't have to, your employer doesn't have to withhold 6.2% or $62, but you're still going to have Medicare withheld, the 1.45%, as well as any federal taxes, any state taxes. So the only thing affecting the net pay here would be the Social Security portion. Any dollar that's not withheld is the same dollar amount that would need to get paid back in the first 4 months. So the last thing is, I know that some are saying, well, hey, why not do it? Yeah, there's no criticism to if you do take advantage of it and you pay it back. It's not like, well, that was silly to do that. Why not? I mean, someone had said, hey, you know, money's better in my pocket and I'll pay it back later. You know, I'm all about cash is king. So don't feel bad if you want to go ahead and take advantage of it. The other aspect, though, is that some people are saying in the comments, which I get, it's logical, right? That if Trump is saying, hey, we're going to forgive, and maybe you're thinking, well, shoot, maybe Congress goes for it, all the stars align, and maybe they forgive any amount that was not withheld and has to be paid later. So why not just do it? So the thing is, well, then why not? Really, you know, I mean, if you feel like that's a realistic position or situation, you know, there's no harm in not having it withheld. It's just that you are going to have to pay it back if they don't do that. But I really don't think that that will be a reality. But let's say that it is. Okay, let's just say that all stars align. It really wouldn't be possible that it would only be those that elected to not have this tax withheld be the only ones that then would get it forgiven. So if all the stars align and they say, oh, guess what? We're going to go ahead and waive anybody that owes the government Social Security tax. So you didn't have it withheld in the last 4 months. Now you owe it. You know what? We're going to say, you know, hey, we're just going to forgive it. They would have to do that for everybody. They would have to do that for all employees on their wages up to $2,000, in my opinion. Now, remember, anything can happen, but I'm just saying, I really don't see that that would just be for those that opted in, if you will. But at the end of the day, if you really truly believe that that could be the case, again, there's no harm, no foul to opting in and getting a higher paycheck. But I would just set that money aside. I wouldn't count on it being something that's going to be forgiven, and you should count on paying it back. It's a minorly slippery slope. I mean, if you take, just because I'm a CPA doesn't mean I know math in my head. Right? I get paid by the hour. So if I give you a quick answer out of my head, I'm making less money. I got to work a calculator, right? I got to work this. Of course, I'm having fun. I say that to my clients all the time. Okay. So if, let's just say for grins, it's $2,000 a week, right? So $2,000 a week is the max. And if we're talking about 4 months, then we're talking about 16 weeks. Now I did do that math in my head. So, right, 32,000. I bet you already calculated that. You should be a CPA. All right. So you take 32,000 times 0.062, right? That's $1,984, meaning that would be more pay that was in your pocket, right? So $2,000 times 4 weeks times 4 months times 0.062, $1,984. Okay, it's money in your pocket. You'll have to pay back the $1,984. I'm not seeing in here that it has to be paid evenly. People have asked, well, can I just pay it all back at once? It seems like you can. I mean, it just has to be paid by April 30. Now, you would need to have enough wages. You're not writing a check back to the IRS. The employer has to withhold it. So I do think when the IRS comes out with further guidance on this, which they're guaranteed to do, the way that you're paying this back typically is based on your wages, right? It's a percentage of your wages. So right now, September 1st, almost September 2nd, it seems logical that, you could just pay it back all at once, on April 30. I don't know the dynamics of that or the calculation, or what were the words here that were used in here. I don't know about the operation of the regulations as it relates to that. Meaning, is it just like, hey, you know what, employer, go ahead and just withhold $1,984, the next couple of checks. But check that out, $1,984, right? If you're making $2,000 a week, that's a whole week's worth of money that you have to pay back. So maybe it's money better in your pocket. Maybe you're hoping that it'll get forgiven. At the end of the day, though, be prepared on that. You're going to have to pay it all back. And even if you pay it at the end, that's in essence, it's a full week's pay on that. All right. Hey, gosh, I thought this video would be like 10 minutes. JJ the CPA here. And we know that isn't always necessarily the case. So I want to give you $1,000. Okay, so here's a couple of ways that you can do this. You can go to Amazon.com. I just released my second book. Here's my first one, JJ the CPA here, top 60 questions of the last 27 years. I know I don't look it. Yeah, I've been practicing 27 years. I know you're surprised because I look very young. If you just take away the bags under my eyes, maybe Amanda and I should work on doing some, I don't know, what do you call that in the videos where you make somebody look better? Anyways, but here's my second book, Cracking the CPA Code. It's about how to get referrals starting with the CPA. If you can get referrals from a CPA, you can get referrals from anybody. You're seen as trusted. Look at this thing, 300 pages. Anyways, you go and buy it. Email me the receipt. I'll put you in the pot. And on September 11th, 4 p.m. Central Daylight Time, between then and 5 p.m. Central Daylight Time, on my live show on YouTube, I'm going to draw a name out of the hat. and the winner gets $1,000. Now, we did get an email from somebody today, and they're like, I don't know if what you're doing is legal. Now, of course, that email didn't have that accent or tone, but nonetheless, what I want you to know is that you can enter this without a purchase, because that seemed to be the issue with the person in the email. And I don't know if they were trying to be helpful or not, but anyways, but you can enter it without a purchase, because if you send us a picture, okay, holding the book, right, we'll put your name in the hat again to win $1,000. If you send us a video holding the book, talking about the book, we'll put your name in the hat as well. So you can send us a picture and a video and a receipt. You're in the pot 3 times. And if you write a review, verified purchase review on Amazon, we'll put your name in the pot as well. So I think that there's a rule somewhere. If you're going to have something like this, there's got to be a way that you can participate without purchase. I don't know where that is. I didn't even know about the fact that somebody would be worried about me trying to give away $1,000. So if you're worried about it, I just want to let you know you don't have to be, because when Amanda and I announced this, we already came up with 4 different ways you can get your name in the pot to win $1,000. 3 of them don't technically require a purchase, right? I guess you could go to great lengths and find this picture and print a copy of it at Walgreens and take a picture of it and send it to me. Okay. Or you could do the same thing and send me a video of it. Anyways, having fun. It's late. You know when it gets late? Must be late all the time when I'm doing my videos, because I like to share information with you. Thanks to those that are always tuning in. Thanks for those that are listening every day, watching every day. Thank you for the emails, for all the support. I go live Mondays and Fridays, 4 p.m. Central Daylight Time, to answer your questions. This Friday, depends on when you're watching. So you gotta look at the video down at the bottom, see when this was published, but I will tell you it is September 1st. So this Friday, September 4th, we're having a launch party. We're giving away gift cards, Tiffany gifts, books, all kinds of stuff. And then on Monday, I guess that would be 5, 6, the 7th. Monday the 7th, we're gonna do the same thing, give away a bunch of stuff. And then on September 11th, 4 p.m. to 5 p.m. Central Daylight Time, we're gonna draw for $1,000. We've got some other gift certificates for $100, other Tiffany gifts, all kinds of stuff. I'm just thankful, right? I'm just thankful for you. And then, you know what? If you made it to here, you're a subscriber. But if somehow you made it to here and you're not, what? Look at how great this is. I love it that you watched to here. I hope you click it, hit subscribe, and then don't you ever forget, you've never met a CPA quite like me. You have a great day. Thanks for everything.
Is a master locksmith, cracking the CPA code. Competition ain't never sweating in. Cracking the CPA code. Now you ain't got no competitors. Get a JJ the CPA if you want to boss up and get paid. All you gotta do is unlock one relationship with one CPA. The combination to money making, we got this. JJ the CPA is the master locksmith. That's how we get it. If you did it, then now you'll know. Crack the CPA code. Crack the CPA code. The